All right, welcome back to another episode of the Investing with TJ show. It's been a while since I've been on this channel, made a video, pretty much since the weekend. And I wanted to touch base with you guys again today, especially given the fact that we just got the November CPI numbers and what that essentially means moving ahead. Now, to lay the groundwork for things, I had, and before we get into this tweet here, I made a call, and I think you guys have seen this now for the past couple of weeks. I have a CPI forecasting model, and my lower limit came in at around 6.10. So basically saying that coming in at 6.10, this is the lower limit. So it could be anywhere this low or anywhere above. Economists were expecting 6.7, though some reports came out saying that some economists now were saying 6.8. I asked you guys what you thought, and here are some of your responses. Thomas Mueller said 7%. Beverly actually said 6.89, and we did get a CPI of 6.8. So I want to give a shout out to Beverly here, who pretty much was almost right on the money. Jim Watari here. And also shouts to Jim Watari for donating to the channel way back when. He gave me a nice wedding present a while ago. 7% here. So you guys were pretty close. Those of you who said 7%, you were close. Beverly was pretty much one of the closest, 6.89. Now, in the beginning, we saw a huge run up in price for both silver and gold as the days preceding, which is something that you tend to see sometimes. You see the opposite movement of what is to come, which is, okay, there's a lot of selling here. What's happening? And then on the day of, you see massive buying. Now, for me, I've heard whispers here and there that those in large institutions kind of use this as a way to basically make a quick buck. They kind of front run, buy up a lot of assets to get people excited. Once people see the price going up, they want to get in, but then they'll start selling and bringing the price back down. So that's what I basically said here in my tweet. If you don't follow me here at Investing with TJ, now at 104 followers. So thank you for those of you who have been following. But I said, as we're seeing gold and silver rise right now in response to CPI, inflation being 10 basis points higher than expectation and 70 above my lower limit, be careful. We can easily see mean reversion by the end of the day. Pay attention to the trend instead. Now, what exactly am I referring to? Well, today, and this is the one day, this is what we're seeing intraday right now. We ran all the way up to about 1789, came back down to about 1778. And we're kind of, as I basically said, we're kind of mean reverting here. We started pretty low on the day, rose up pretty aggressively right after the news, and now we're somewhere in the middle. We're at 1781. But will that hold into next week? And that's kind of what I want to talk about next. And with my monthly forecast based on monthly inputs, recently I've been putting in data from, day-to-day movements. But if you just look at the closing prices of the last month and newly updated CPI input here, which is 278.88, I actually had 278.8. So 8 basis points higher is what I needed to add there, because again, I was basing mine off of a 6.1 as opposed to a 6.8. But it didn't really change much over here. So my lower limit for end of December is still 1773.68 cents. And we're closer to that than we are to the central limit. So things are still looking pretty weak here in the gold space. Now, if we take a look at the last few days, something interesting is developing here on this chart. And I also want to get your input on this too, because I'm not 100% sure with this, and no one really can be, but I do want to get your opinion on this. So as you can see here, the 20-day moving average crossed below the 253. So obviously that's a bad sign. We went above in several weeks ago, and now we're back below. So it's kind of like a false move there. And then we had a very dramatic drop. Some may even say, hey, this is a head and shoulders pattern here, which is pretty bearish for what's to come afterwards. Now, considering those things, we're seeing very small day-to-day ranges in gold here. And in my view, I'm starting to wonder, are we potentially, and this is the bull case here, are we potentially building up a case for a cup and handle that may come in the next couple of weeks? You let me know. Because if we move ahead and if we continue riding this trend line here and we don't break below it, it's going to kind of make a U shape. And imagine if we keep going up, that's going to eventually make a cup. But if we continue to move over here, then edge lower, then of course that's a bad sign. Some may say, hey, that's what happens after you get that head and shoulders pattern. And we also had the 20-day go below the 253. So on your end, what do you think? Do you think that we are more so heading towards a bullish scenario with a potential cup and handle, or do you think we're heading towards a bearish scenario with us possibly breaking that trend and having a head and shoulders? Let me know in the comment section below. Also, please subscribe. Thanks again for those of you who have been subscribing. Hit the like button. It's Investing with TJ.